Hello, and welcome back to our weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. So this past week, we saw the market up 1.96%, which brings us up year to date 17.45%. Really surprising week in the market. We saw the market shed close to 2% on Monday, only to completely recover by Wednesday and then hit all-time highs by Friday. This is the market we're in. It's been a pretty crazy, wild time this whole year. But this week, the real stories come around beginning of the week, fear around potential future lockdowns with the Delta variant of the coronavirus. And then the positive was Q2 earnings and really a blowout season so far. We're not all the way through. But if we look at the market, we see this massive sell-off on Monday, a lot of fear in the market, closing down, and then all of a sudden just a swift recovery on Tuesday. By the end of the day, we're actually higher, and then from then on, we just continue to see us go higher and higher. Now, it is worthwhile to note that this isn't completely unheard of. So there's two things. One, we see many times that the worst days in the stock market, within 1 week, we actually see some of the best days within the stock market. One of the reasons why we constantly are saying it's important not to try and time the market, staying in for the long run. In addition to that, we've just seen an incredible earnings season. So the best earnings season we have ever seen was first quarter of 2021. This earnings season, it's looking like it's going to compete with that one or slightly come below. So the second best earnings season we've ever seen. Now, stocks are valued relatively high, but if earnings keep coming in this strong, it gives at least some support for the valuations that we were at before. But if we continue seeing this run up, we'll continue to see this same cycle of being very expensive. But that is at least a backdrop for why we did see a recovery along the rest of the week.
It's also important to note that with interest rates as low as they are, we would expect to see a relatively high price to earnings ratio. And in addition, because of the lockdown and the pent-up demand, it's also not surprising that that pent-up demand for purchases and travel are spilling over into the second quarter, and we expect it to continue to spill over. A great example of that is that right now there is a shortage of chips for the computer industry, for the automobile industry, and we don't see that changing in the next 3 to 6 months at all.
Yeah, just to elaborate a little bit more on the beginning of the week and why we did see this drop. If we look over at the graph of the coronavirus cases, we do see we're starting to trend up. And one of the things that's interesting to note, it's not just the Republican states that have low vaccination rates. It's actually almost every state, every municipality is trending upwards, no matter whether they are highly vaccinated or not. Now, it is extremely important to note we are trending upwards, but out of people who have been vaccinated, there have not been the same amount of cases going to the hospital and no fatalities. That's exactly what the vaccines are supposed to do, which gives us confidence that even if we do see this trend continue to go up, we're likely not to see the same lockdowns. Now, what we believe is the market had this scare. Whoa, wait a minute. We are trending up dramatically. It's 2 weeks after the 4th of July. We saw this several times. You have these holidays where people get together and we start to trend up. But we believe that the market realized, well, even though the cases are trending up, fatalities and hospitalized patients are not trending up in the same rate, which really strengthens the idea that we're not going to have this lockdown. And that led to a full recovery on Tuesday.
And another thing I would like to add to all this, what we are experiencing with the coronavirus is something that will harm the economy if it gets out of control. The good news is that 97% of the people who are being hospitalized have not been vaccinated. But when you go through the numbers, you realize that most of the people who are having major problems are those who are not vaccinated.
Yeah, overall, the within the US, we're not really worried about the re-shutting down. Globally, however, it is a different story. Europe is far behind on the vaccination. We're seeing emerging markets just starting to get some vaccinations even out there. India, it's still really difficult to find a vaccine. And one of the things outside of the US, they're dealing with vaccines that are less efficacious, especially to some variants than the Pfizer, Moderna, Johnson Johnson. So we are seeing kind of a bifurcation between what the US is experiencing and what the rest of the world is. Now, the S&P 500, which is mostly again large cap US stocks, it is mostly reacting to how the US is going to react. Now, all that being said, that really does describe what we experienced over the past week of the drop and then the recovery to all-time highs. The market is still in a relatively healthy spot when we see earnings coming out extremely well, but it is something that we are still monitoring. Inflation's still high. We're still seeing shortages, as Rich said, within the chips and other industries, and we don't really expect that to go. And as we do maybe see the auto industry or some of those industries start to open up, we might see others replace that. So one thing that we've been noting, rents have been going through an inflationary cycle of up close to 17% over the year. So if we start seeing those sort of numbers transition from the auto industry to rent, we're still going to maybe see these high inflation numbers well into the rest of the year. And if that's the case, we'll have to see how the market reacts to that. So that's some of the forward looking. We feel really positive about our current situation with the great earnings that have been coming out. But looking forward, we still have these headwinds of inflation that we don't think are going anywhere. As always, we appreciate you. Your money's here to support you. We're here to support you. We'll see you again next week.